And we're joined in studio now by Bilal Abou-Diab. He is co-founder and CEO of the app Volt, which is based right here in the UAE. Bilal, thanks for joining us in the studio today.
Thanks for having me.
So Bilal, tell us a little bit about Volt because, you know, to be honest, there are plenty of finance apps that are out there. What exactly is different when it comes to Volt?
Yeah, optionality is a good thing, right? So we see that there's a lot of apps, and there's a lot of apps that try to service everyone, but what we really like to do is focus on a specific target demographic that needs a very unique type of help. So everyone comes to the UAE aspiring towards affluence, yet a lot of institutions don't really empathize with people who are affluent. So what we're looking to do is we built a company that's very focused on helping the affluent reach their financial objectives.
I need to stop you there and ask you what you mean by a lot of institutions don't empathize with the affluent, because as somebody who's not particularly affluent, I feel the opposite. I feel like everybody is catered towards the affluent. So I don't, what do you mean by that?
Yeah, well, I think a lot of institutions are incentivized a specific way, not necessarily to be a partner to the affluent, but to sell the affluent, right? It's like having a doctor who is very much incentivized to give out surgery or sell pharmaceuticals. At the end of the day, it's very important to identify how institutions are incentivized to help people. And when we're looking at financial planning and we're looking at wealth management, yeah, you need an app that helps you, that's intuitive, that has a great user experience. But what most people really need is they need trusted advice. You know, we see over the past 2 weeks, there was a lot of turmoil in markets and there was a lot of uncertainty. But what you really need sometimes is to speak to someone. It's to have someone that you can use as a sounding board that understands your circumstances, understands your objectives. So it's not just the app. So the app is there to give you an easy place to do your FX, to convert currency, or whether to place a deposit, or whether to make an investment or sell an investment. Because a lot of times we don't want to call someone to do something that's easy. We just want to interact with it. But what you do want to call someone for is you want to call someone to help you make decisions. Because it is hard and you want a professional. But how do you trust that professional? So what we're really doing is we're giving our clients human advisors, but we're giving them an app to do things that really makes their life easy when they really just don't want to speak to anyone. It's 11 o'clock at night, just want to do a FX transaction, get on with it.
So how many human advisors do you have on your team?
So at the moment, we have 5 advisors.
Okay, and so people might be able to meet with that person directly based in the UAE, or would you interact with them online, a bit of both?
So at the moment, it's around 80% virtual. I think people want to have the comfort of being where they are and speak to an individual over the phone or over a virtual call. So we're seeing that much more often. But then usually the first meeting, you want to get a gauge of a person. So a lot of times there is the in-person to gauge that trust and that understanding before moving to a more virtual cadence later on.
And so what is, I think when you think about financial advisors, I think a lot of people think, well, there's a fee that's coming out of that. I have to pay for that financial advice. I might as well just put it in an index fund, an ETF, whatever that is, and just keep it in the long term. A lot of people think that way. So what is the fee structure for working with your app compared to, there are plenty of financial advisors already out there. How's this different?
So I'm really impressed, by the way, by talking about index funds. That's great, right? But if you look at the majority of individuals don't know about index funds. And when they do find out about index funds, they invest in index funds, the market goes down 20%. They're worried, they don't know what to do. Did I put it in the right index fund? If I go to an interactive brokers today, it's like going to Cheesecake Factory. I have so much optionality. Do I have the time to research which option is the best for me? I mean option as in index funds as an example, or ETFs. So fees is very important to understand how a company is getting incentivized. The way we work is we take an advisory fee regardless of what product the client is. So whether the client's in a money market fund in savings, or whether they're in an ETF, or whether they're in any type of product, they're paying the exact same fee. So the advisor and the company has no incentive to push you in one thing or another. We also don't take transaction fees. And if you think about most trading apps take a transaction fee. And therefore they have every incentive, whether they want to or not, they have every incentive to make sure that you buy, sell, buy, sell, buy, sell. Market is down. They have a best interest for you to sell and buy something else. So they're going to drive your behavior through the product and through the content towards trading. While if we take an advisory fee and we do not take a transaction fee, we have every incentive just to help you reach your financial objectives. And that's where we talk about, affluence. When you're early in your savings journey, what's really important is to save effectively, to budget effectively, to have an emergency cash fund, to get out of debt. But then when you get into the $100,000 plus mark, that's the time where you have to think, what are my objectives? Where do I plan on retiring? How do I plan for retirement? At what age? What does it cost me? Where am I living? A lot of people don't have these discussions. Having an advisor to have these discussions with, help you build a financial plan. How should I invest in accordance to this financial plan is essentially the value proposition that we're really driving here.
Number one, is that your definition of the modern affluent? Once you reach that $100,000 mark, then you've got to be making wiser decisions with your money.
For sure. I think see, at the end of the day, there's a cost of servicing individuals. And in what I say for anyone who has less than $100,000, is the most important thing is to save effectively. Because no matter, let's say you have $10,000 and you're making 10% a year. On $1,000, that's $100 a year. That's $8 a month, right? So when you get to a specific level, that's where protecting your wealth becomes your main priority. So you see a lot of people in the bracket below $100,000, they want to take risk and they want to create wealth. But once you get to the $100,000, $300,000, $500,000 plus mark, the behavior changes. People start wanting to protect their wealth because they fought for every bonus, they fought for every salary, they fought for every earning. And what you see, the trend in the UAE is real estate and cash. It's not index funds. So people go like, I want to protect it, I want brick and mortar.
Yeah.
And then they take concentration risk, they stay in cash, they don't understand inflation. But the real reason is they go to institutions and they don't feel the trust. They don't feel the confidence. While if you look at a country like the US, you see 85% of wealth is actively invested, while in the UAE, you're talking about 15%.
Okay, it's interesting that you have 5 human money advisors. Why have you not gone down the AI route with this?
I think AI is crucial. It will change everything. I think if you are today interacting with the latest large language models, I really recommend you to get a second opinion from it. As in, if your banker or if your wealth advisor is telling you something, definitely put it into your latest large language model and ask it, hey, is what this person telling me is true? So large language models will have a place. But the adoption curve is at a point where people still want to talk to a human being. There's still a trust level. And there's a trust level of understanding what are my circumstances, what are my objectives, because every person is different. You have someone who is in their 50s who want to retire at 55, and you have someone who is in their 30s who never wants to retire in their life. They'll have different objectives, they'll have different discussions and different places to invest. And at the same time, people want to take risk. And we talk about index funds, but some people actually want to invest in AI and robotics. How much can I invest without affecting my financial plan? Is that 1%? Is that 5%? Ooh, I'm scared. I want to hold gold. How much gold should I be having? These are tough discussions. So an AI is very helpful to that, but people still want that human advisor that they have contact with, and they want an app to make these actual decisions, right?
And you're talking about risk and people being risk averse at a certain point of wealth, specifically. And I think also about the apps people choose to use or the digital platforms people choose to use. If you're breaking into the market as a new app, how do you gain the momentum? For example, I think there are certain apps that a lot of people here in the UAE have started to use, like Weo. But it's, majority owned by ADQ. You have a very strong backing that makes you as an investor feel secure to keep your money in that place when it's not a conventional bank. What exactly makes people feel safe to trust their money with you, an app that was created as a private entity? What sort of backing or security measures do you have?
Fantastic question. I like Weo. So what really matters here is understanding the client, understanding their concerns, and solving a problem. So for any company, whether it's an app or otherwise, it's really important for the company to understand the problem and how you're solving against it. The number one concern of clients or individuals is exactly what you said, which is I need to trust the institution isn't going to disappear. So we made a very active decision from the very beginning. We open our clients' accounts directly in their name in Interactive Brokers. We're just an advisory overlay. And what that really means is you could delink Vault out of your life and just keep your assets in Interactive Brokers. You're just paying an advisory fee to Vault so you can experience our platform, because Interactive Brokers is confusing. Interactive Brokers' incentive is for you to trade. It's a trading app. But the security of Interactive Brokers is huge. They have hundreds of billions of dollars. I can trust them. I know they're not going anywhere. Vault is an advisory firm. What I need to trust in Vault is I need to trust their advice. And how do I trust their advice? It's in the way we're incentivized. Who is the advisor? How is the products inside designed? For example, using index funds, etc.
And I'm already on Interactive Brokers, and I know it's great, low fees, but you're right, it's very confusing. There's so much choice on there. And more often than not, I'm just copying what other people are putting money into. But so my question is, if people have got already an IB account, can they just plug Volt into the equation?
Yeah, that happens a lot. And to your point, you could copy other people. Other people have different objectives. And what's very important with your Interactive Brokers account is, I always say this, it's like a Cheesecake Factory. It's a place where you have a kitchen and there's just too much options. The way I look at it is, they're the cloud kitchen, they're a reliable kitchen, we're the fine dining restaurant helping you going like, okay, how do you like your food? And we're helping you deliver that ready-made meal. So yeah, you can tag your Interactive Brokers account to us. We now start charging an advisory fee, but now you don't pay Interactive Brokers a trading fee because we pay. We have the relationship with Interactive Brokers, and therefore now you have an advisory company that gives you a very select amount of options that are in your best interest, because we don't get paid from the product provider. So why give you a mutual fund when we can give you an ETF? Why give you a savings money market fund when we can give you that? We take your side of the equation. We partner up with you to protect and grow your wealth instead.
Bilal, how many active users do you have at the moment?
So we're growing at a very fast pace. So we took a decision last year to stop disclosing that, to be very transparent, because it's changing on a month-on-month basis. We support many different families in the UAE, in both Dubai and Abu Dhabi.
Okay, brilliant. Thank you so much for coming in, telling us a little bit about Volt.
Thank you. Thanks for having me.
That's the voice there of Bilal Abou-Diab. He's the co-founder and CEO of Volt. So it's definitely something to consider when it comes to your financial advice. Let us know, would you trust a new app out in the market? Is there one that you're dedicated to? Feel free to get in touch with us on 4001.